Welcome to the Truth About Real Estate Investing show. My name is Erwin Szeto. Over the weekend, during the snowstorm, I had a rare gift. A couple of quiet hours, a coffee or two, and a spreadsheet. You know those jokes that people make about Asians? Yes, I can sit in front of a spreadsheet for a few hours. Anyways, for the last few years, as the real estate market corrected and the stock market soared, I was feeling a bit lost, having a lot of FOMO. That quiet time helped bring me some clarity. We've shifted our client work to start with a wealth plan, which is a financial plan for what I call mid-net worth individuals and also people who want a lot more in life. And the numbers made something very clear. In meeting after meeting, I hear the same thing. It is an ideal time to buy real estate, yet my clients would rather be selling. My clients are everyday investors. They want to be as passive as possible. They don't want to be business owners, rental property operators. Now, again, so my clients want to sell, they just don't want to sell at today's fire sale prices. So they wait. Meanwhile, everyday investors who are ready and willing to buy real estate feel stuck. That's what my friend is telling me. I have a friend who is a highly successful mortgage professional at one of Canada's big four banks. And to sum it up perfectly, he was telling me that his real estate investor clients are ready, willing, and able, but they don't feel the risk is worth the return. And I feel that personally. I've shared an update on my own portfolio. In the last 6 months alone, I've dealt with 3 non-paying tenants. One just recently stopped communicating after 2 months of missed rent. And now I'm forced to file for eviction. We've already reported the arrears to front lobby. In my landlord tenant board hearing, when we booked it, it's gonna be 9 weeks to get a hearing. By then, I'll likely be out 5 months of rent, and enforcement usually takes probably another 3 months. So I'm looking at potentially 8 months of no rent. All the while, I'm covering rising costs in a softening rental market. And the city of Hamilton is looking at passing an over 4% rental increase. Is there any wonder why real estate investors are feeling stuck? Now back to that spreadsheet. Did you know the Canadian stock market returned roughly 30% last year? In hindsight's always 2020. If I had applied the 25% down on the stock market strategy that I've been recommending to clients when I deem appropriate, that 1 year return would have been 97%. That's the power of leverage when used appropriately for the appropriate investor. That is why so many of my real estate investor clients are starting to feel excited again instead of feeling stuck. They are doing the right thing by properly diversifying, accessing liquidity, and compounding wealth without tenants, toilets, or the landlord tenant board. For high energy entrepreneurs who want to hustle, real estate still offers wonderful opportunities in today's buyer's market, as past guests of the show have talked about, like Elizabeth Kelly, like Mike Rosehart. If you're interested in operating a business, my good friend Christian Spillfogle will come back on the show. He is in the business of investing in real estate for value add and also doing serious turnover, renovations, all sorts of things, complicated stuff. There is lots of opportunity for that investor. But my reality, my personal preference is different. I personally want to help investors, especially those with families, work less, risk less, stress less, and earn more over the long run. That's my focus with my family's portfolio and at iWin Wealth Planning, helping investors build strategies that align with their values, their time, and the life they actually want to live. For me, life is too short for tenants, toilets, and tribunals, especially when there are smarter, simpler ways to build wealth and protect what matters most. Family and time with family. At the upcoming Wealth Summit, I'll be walking through exactly how we're helping clients reallocate risk and also to basically diversify into the stock market, as generally my clients are heavily overweight local real estate, which I don't think is advisable for anyone. And we're going to talk about using leverage in the stock market and also insurance-based strategies to create liquidity, diversification, and long-term growth without the operational stress. On to this week's show. It is the start of a new year. Many investors hit reset. I always think that New Year's resolutions are just like hitting a reset, and they're rethinking not just their goals, but their entire strategy. My guest today is Winnie Tsang, a former corporate CFO who now acts as a personal CFO for families and business owners navigating wealth, risk, and long-term planning. After years in corporate finance, Winnie made the intentional leap into entrepreneurship with a mission, helping families, especially as they age, make smarter and more resilient financial decisions. She is now a partner at Open Concept Financial Group, where she helps clients optimize beyond a single asset class. Winnie's also my coach and mentor in wealth strategy outside of real estate, which I hope to complement my real estate first approach that I teach Canadians today. Please enjoy the show. Welcome to the Truth About Real Estate Investing show.
Thank you.
Thank you for coming on. What's keeping you busy these days?
It's keeping busy. Well, so many things. Client work, but also building the company. So I think both of those sides kind of like, I guess it's actually very creative, this line of work. Sometimes a lot of people think about finance and money and they think it's all logic and math. but I actually see a lot of creativity in our work.
I call it financial jujitsu. But and you have kids too?
Yes.
So busy.
Busy, young family. I have
Right.
2 boys, 4 and 9.
And something interesting is that you did a recently. You left a career. I don't know if you own part of that company or if you were an employee, and then you joined a new company.
Yeah.
Can you talk a bit about that journey and also like give a bit about your background?
Sure. So, I think my background really largely was corporate. So I spent many years climbing the corporate ladder, doing a variety of corporate things, and primarily started off in consulting, then moved into
Like one of the big firms,
finance.
like
At Accenture. So I
oh,
did
okay,
strategy consulting work
yeah,
at Accenture
okay.
for a couple of years.
When it was called Accenture, before it was called Accenture,
No,
or
no, I don't go back that far.
okay,
But
okay.
it was already Accenture. But it was so formative. I mean, I love that kind of work, the challenge of new projects, looking at businesses differently. We did some growth strategy, some restructuring work. And when you're young, it's fun to travel and see different things and see, different companies. And I love the challenge of that.
Oh, sorry, just pause a second. I forgot you're younger than me. That's why for sure it was Accenture.
Not that much younger.
To fill in the listener, previous to Accenture, it was Arthur Andersen Consulting.
That's right.
And for those who remember, they're no longer with us. One of the big 5 accounting firms is no longer with us. Sorry, I interrupted. Sorry.
Yeah, no. So I loved my work there. I eventually then moved into Rogers Communications. So, and that was really fun because it was just on this incredible growth curve. And if you think back to that time, I mean, RIM, BlackBerry dominated the data space. And then before long, iPhone came along. Rogers was the only company in Canada that offered it. So it had this really incredible stretch of growth when wireless data became the norm.
Oh, you killed BlackBerry. Okay, I get
Yeah.
it. All right, sorry, continue.
But it was so fun. It was like such an entrepreneurial space. I met my husband at Rogers. There was just like a community of people who were really building the company, really invested. Every quarter we would be figuring out different strategies to win the market. It was a share grab at the time. So it was a really fast paced, like really fun place.
You call it share grab, but you were killing BlackBerry, but yeah.
Yeah, share grab. I would say not device based, but more between the telcos. Like there was a lot of interesting competition, competitive dynamic. Yeah.
And I'm just joking about the killing BlackBerry thing. I think it's well documented. They failed to evolve.
Yes, yeah. But even that story, like how that played out, like seeing the share, like percentages by device, how it shifted, how quickly it shifted.
I love the story. It only came out recently, within the last 2 years. How one of I think it was Bill Silly, how he shared the story, how he wanted BBM to be on all platforms.
Yes.
But it was the other gentleman, that said, well, if we take BBM, if we make it available on all platforms, we kill the BlackBerry hardware. And then Bill Silly said, it's already dead. And then BBM could have been WhatsApp.
That's right. These are some pivotal, like strategic choices.
Massive mistake.
Yeah.
Because WhatsApp later sold for $1 billion.
Right.
To Meta, previously Facebook. But they could have made something of BBM, but instead,
it was like the most ubiquitous, right? Like at the time.
Well, everyone was on BlackBerry.
Yeah, there was like, yeah, exactly.
And then again, is there any doubt it would have been the WhatsApp of the world instead of BBM would have been the WhatsApp of the world rather than WhatsApp?
Yes.
Yeah. No one's perfect. These are multi-millionaires making these decisions, and hindsight's 2020. But sorry, continue.
But it's so interesting. I mean, that is a story of how the power of like what the consumer wants. So I remember when we were like at the iPhone stage, and there was all this talk about how the network was not sophisticated enough to carry the kind of the infrastructure to actually do video calls, like the kind of stuff that we wanted to do on such a smart device, right? And so network became the constraint of why we, that wouldn't be very popular. But actually, consumer choice in the end, like paved the way forward, right? And so I think about, in these market dynamics, even in AI, right? Like when you think about like what the marketplace and how it's evolving, right? Don't forget the power of consumer choice.
And speaking of evolving, like I've shared with you many times, and I've shared on the show. And these are just the conversations I'm having with my past clients and people who come in and want to talk about financial investments and whatnot.
Yeah.
Is that pretty much almost nobody wants. So sorry, let me preface that. The everyday investor who wants passive investments, pretty much none of them want a local investment property. I hear this consistently for people in
Mm.
Ontario and British Columbia and Quebec specifically.
Right.
Right? Albertans are still going. They still find opportunity. They don't have rent control. Uh, they don't have landlord tenant board stuff like that. So I understand where they're coming from. Um, but you work with more everyday people, I'd like to say, not less of a like 'cause we work with almost entirely real estate investors.
Yeah.
That's just who our community is and who our clients, especially the real estate tax tips. But you work with more of the everyday people. And any observations what normal people are doing?
Yeah, you mean in terms of money and wealth and choices?
Anything. Kind of like what I shared with you before we started recording was, like none of us know what people are actually investing in, right? Because I think there's a lot of lessons to be learned.
Yeah.
Like a good example is I've said this many times. My typical client is just like the millionaire next door, the one that's in the book,
Yes.
right? Humble. They
Mhm.
drive used cars. They don't wear brand name clothing. Uh, they're frugal people, but they're worth couple million, right? But you
Mhm.
never know,
Mhm.
right? Yeah. What do you see out there?
Gosh, such an open-ended question. I see all kinds of people. I mean, money is such a spectrum in terms of like how people relate to money, how they
Hmm.
handle money.
Hmm.
But if I reflect back on maybe individuals that you serve, which is, they got into real estate early, they really kind of call themselves real estate investors. I think
Hmm.
that's really your clientele,
Hmm.
right? Versus maybe more the general public. And I would say the general public still might have real estate holdings,
Hmm.
primarily principal residence, maybe one other investment property,
Hmm.
but not at the scale
Hmm.
that that I think some of your community follows, right? And I would say the biggest difference, and I wonder if I step back and say, oh, why did we see so much concentration in
Hmm.
real estate? I think obviously there were years of really, really massive growth, right?
Hmm.
Like it became a very apparent
Hmm.
wealth building
Hmm.
engine for a lot of people. A lot of people who were astute in doing the math could see,
Yeah,
like
like
on the
yourself,
upside of that,
you're well
right?
educated,
Yeah,
you could afford it. I
right.
actually even just even ask you, why did you never buy an income property or
It's
a
such a
pre-construction condo or
Such a great question.
which
So,
probably a lot of people
listen,
around you did, right?
yeah, it's true. And I have to say that, okay, so my husband and I both in finance. So,
Yeah.
yeah, we could have run the numbers. But for a long time, I was like, I can't imagine how the prices can continue growing in this manner.
Yeah.
Right. And in hindsight, yeah, for sure, I missed the boat. Right. But also, I think, when I think back to even portfolios that I see and maybe even portfolios that you see, the interesting thing about real estate actually was this idea around passive investing,
Hmm.
right? And when I unpack that, maybe from a human psychology standpoint, I think it's more that people have this strong sense of a loss aversion
Hmm.
and also the burden of choice.
Burden
The
of
thing,
choice.
yes,
Elaborate.
the thing about real estate is you could see what the rental rates are and you kind of choose a property. You choose once versus when you invest in the market, you choose many, many times. And you can see the ups and downs of that. Some people are very cautious about choices of that sort
Hmm.
because they feel the pain of a negative number.
Oh, that's me.
Right? But in real estate, you don't see it because you don't see it every day. You
Yes.
don't see the values fluctuate. You
Correct.
don't necessarily even do the math on what taxes are owed. After paying all the fees for your realtor and land transfer tax and all the et cetera things that actually add up, you never do the math in real time on that. Right. Whereas, like your financial statements, you see it every time you log in.
Hmm.
Right. So I think it's interesting. So today's investor and the most sophisticated people when it comes to money are really thinking about diversification.
Hmm.
Right. They're shifting and taking a look at where should I place my next dollar
Hmm.
for what type of objective.
And what are they looking for diversification? What are people? What are they diversifying from, and then what are they diversifying into?
Yeah, well, I think a big theme is diversifying from perhaps multiple investment properties and perhaps coming off of that, right? So that they're actually yielding differently than where they are today. Unless you bought in years
Mhm.
ago, many people who have entered the real estate property realm are no longer cash flow positive. It's eating into their cash flow. So I think when I talk about diversification, it's not just diversification of asset types, but it's also income diversification, right? So if we zoom out and not just think about real estate as an asset class or your investable assets as an asset class, even your income streams, like do you have multiple income streams that really create resilience
Mhm.
in your portfolio?
Mhm.
And the thing about resilience is that it gives you options. It allows you to trade or buy time, right? And so when I talk to clients, I always look at, okay, well, interesting that you have all these assets that you're holding for long-term growth. Hopefully, it'll turn around years from now when you're ready to exit that property or exit that investment, right? But how is it kicking off cash flow for you today, right? And are you living better, differently? Would you make different choices in your life, right? If you weren't so cash flow constrained on a month-to-month basis, like a lot of families are,
Mhm.
right? So I think it requires a balance. It requires rethinking how you place your assets and perhaps how you restructure that picture.
Yeah, I'm just thinking about how I've said on this show and I've said on my meetups and whatnot. Like my condo friend was telling me, he tells his clients, if you want to purchase this pre-construction condo, be prepared for negative $1,500 per month.
Wow.
And you're telling me people want to diversify their income.
Yeah.
That's a interesting choice. And
Yeah.
then actually like 6 months after that, he said, I now tell my clients be prepared for negative $2,000 a month. Right?
Yes.
We're talking about income and diversification. Again, for someone, there are people that can afford that. Is they are a small percentage of the population. But what kind of recommendations are you making for income diversification? Probably not
That is
that.
so tough. I mean, isn't it interesting that despite someone telling them that, hey, be prepared, this is going to be $2,000, and maybe the pricing of the real estate appreciation might not even be there. It might be a decade out, right? But even then, you still have people who say yes to that, and you wonder why is that? And I actually think this field is so interesting because we have all these cognitive biases when it comes to investments and money and how we make our choices, and don't discount the biases that sometimes steer you in a direction that is completely contrary to what the objective data might suggest,
Mhm,
right? So
mhm.
this is a perfect example of familiarity bias, right? I made money this way before, or my parents have always made money this way before. It feels safe. I have an asset. Of course, it's going to come back. Okay.
Yeah,
But if it comes back even just at the rate of inflation, then I'm sorry, you've actually lost money,
yeah,
right? You haven't deployed the asset in a way that would maximize your wealth, maximize your
yeah.
opportunity.
That's why
And
I
it's
like
too
this work.
bad.
That's why I like this work. There's like, again, it's I called it like financial jujitsu. In that we're looking, I think, not all people are looking, but people like you and I, and probably most of the listeners, we're looking to how to optimize. I tell clients, like, I find joy in figuring out how to make more money, work less, pay less tax.
Yes, I love that.
If I can check those boxes, again, we're Chinese, right? So, there's the Chinese saying, "Yao pang yao lang,"
Yes,
right?
yeah.
Both cheap and quality. So I've always
Mhm.
been on that pursuit of those things, and then also you want fast,
Yeah.
right? And when in our trips to Asia, for example, you can get those things in a restaurant. I can get it cheap, I can get it fast, I can get it like better than anything in Toronto,
Yes.
right? So I totally digress, but no different with
Next
the type
level.
of investments that we talk about here.
Mhm.
For example, like your business partner Ivan was the one that introduced to me leverage segregated funds.
Yes.
Like, because I don't know if you know the story, because my cousin's friends with Ivan,
Yes, yes, yes.
right?
Yes, I remember this.
So my cousin was the one that mentioned to me segregated funds like 2-3 years ago. And so I'm like, never heard of them. Let me ask Cherry. Cherry, you ever heard of segregated funds? She's like, no, like no one ever made money on these things, right?
Interesting.
Like,
Yeah.
so I told them like, I'm not interested. But then what was missing
Yeah.
was the leverage piece.
Yes.
But anyways, let's talk about Open Concept Financial Group, the
Yes.
firm that you joined. So you were corporate. You're
Yeah.
making lots of money in corporate. You
Had
decided,
a completely different kind of career, let's call
Right.
it, right? Where you're, working on behalf of a big company,
Yeah.
publicly traded.
Right.
I also went into working for a company that was owned by private equity. So in both cases, I'm steering.
And you were C-level.
Yeah. So I was working as an operational CFO
Right.
in that capacity. And so lots of interesting things that,
Making lots of money, but imagine pretty long hours.
long hours.
Yeah.
And as you moved up the ladder, there's a lot of politics. Really, you're dealing with a lot of things just to move things forward, right? And then COVID happened, which was a big shift and change for a lot of people, and us included. And it gave me a chance to reflect and say, okay, if I wanted to be really purposeful about what I do next, what would that look like, and what could that be? Right. And so in discussing with my husband, I took a sabbatical. I just took some time off. In the moment, I had another baby, so we grew our family. So there's lots of blessings that came out of that. And I have to say, my passion at the time was I thought, okay, I really want to serve this space of older adults and caregivers. I had this, vision of how I could support this space. And maybe it came from my devotion to my grandmother, right? Who was one of my favorite person in the whole world. And my mom is a clinician. She worked in geriatrics. So it was very enmeshed in my life, like these stories about how do we help. And I also felt this sense of duty. I had this sense of duty where I felt like, isn't it a shame in our society that when people got older, they get moved into these institutions and they get forgotten about and left behind, but they were the ones who created society in the way that we get to enjoy it.
Yeah.
And
They
so
paved the way for us,
Yeah.
especially those that are children of immigrants. But yeah.
So I wanted to open that up and say, how do we support this caregiving cohort, of which you and I will definitely step into at some point in our lives, right? So this is also being selfish because we know we're going to be wearing that responsibility. And how do we make that better?
Yeah. How do we even afford it? A friend of mine was just telling me the only bed available for her mother-in-law was $15,000 a month.
We are
This is in
shocked
Ontario. Yeah.
at the sticker price of care.
Yeah.
Right? Shocked.
Yeah.
Because we only assume that, the government's going to take care of it.
Right. Not on this show. You don't listen to the show, obviously. But sorry, go ahead.
So the shock of care, how it burdens a person, right? Who often it is someone who still has perhaps young children who are still in the home. They're still managing a career, but now mom or dad are sick.
Yeah.
Right.
Yeah.
And so what can we do to reinforce this picture? And interestingly, I did a lot of work and studied and tried a lot of experiments. I ultimately came to the realization that there's nothing that I could necessarily do to compete with the government and what they could provide in this space. But I uncovered a very interesting insight because through this work, I had interviewed maybe 60 different families, of different, at different life stages through this journey. And it became really clear to me that actually financial management, regardless of whether you were high resourced or low resourced, if you're, the siblings are in different parts of the world, doesn't really matter what the makeup of the family was, but financial management was a common challenge across everybody.
Yeah.
It was universal.
Yeah. In this line of work, I see it now.
Yeah.
It's quite bad.
It gave me this light bulb moment because I was like, that's an interesting angle, right? That's an interesting angle. How do we optimize families and their wealth so that when they step into this inevitable life stage, that they would be able to juggle that differently with more options, with more choices, with more trusting conversations about maybe what mom and dad want. And if that were the case, then I'm going to be much more likely to have that same conversation with my children. And how would that transform that picture for them? And that's kind of what, interestingly tied me into this area of finance. And so, that Ivan and I go way back from high school. And so I was like, oh, who do I know in this space? So I called him up and I said, hey, I'm interested in this kind of interesting problem. What do you see? And as we got talking, I learned way more about kind of the opportunities, the various offerings, I guess you could call it, the way you think about it. How do you actually support families in that life stage? And that's when we put our brains together to say, hey, this is an interesting, think of when you think about as an entrepreneur, you think about market and the momentum in a market. There's a lot of momentum in this market, right? Because not only are people getting smarter, there's more knowledge about investments. People are more savvy around figuring out those questions, right? And two, the reality is there's this huge wealth transfer that is on the horizon,
Mhm.
right? So, what's interesting about that is that just like in market dynamics, there is another opportunity for share grab, right? There's
Right.
going to be share shifting
Yeah.
in this space. And for a young, hungry firm, like
Mhm.
we could actually do a lot with the momentum of that.
Mhm.
Yeah.
Just to add to that, I've noticed there are boomers. I don't know what else to call them. I've noticed quite a few boomers have amassed significant wealth with no. I'd say they haven't quite optimized their estate plans. For
Mm.
example, like no life insurance.
Yes. Yeah.
Some of their wills, if they have a will, again, surprising the lack of wills that are out there.
Yes.
Yeah,
Yes.
yeah.
Very much so.
So in some of these situations, it's consulting with these people on how to get this in order,
Yeah.
and then the very common regret is I wish I bought life insurance sooner.
Yes, isn't that so true? And the interesting thing about life insurance is that when you hear the word life insurance, there's almost like this aversion to it,
Yeah,
as if I'm being sold this product from
yeah,
this sleazy guy
yeah.
who, maybe is just trying to make money off of me, etc. Right? But I think a more modern version of life insurance and life insurance, there's just a wide spectrum of products and offerings in that space. But a more modern version of that is that, wow, did you not realize it is one of the most tax advantaged
Yeah.
ways to figure out estate planning?
Hmm.
It's one of the most tax advantaged. And you buy insurance with two real assets. One is your health and your age. Okay. So when you're at the age where you're finally thinking about estate planning, oh, I've retired. Now let me figure out what that means for my children. It's too late. It is way more expensive to figure that out in your 60s than it is to figure that out in your 30s or 40s.
Right. Yeah. And that's why I think it's important to talk about these things. On one scale, I used to work for the Rogers family. So,
Mhm.
for those who don't know, Ted Rogers, because the case went to court, it's all public. But he
Yes.
had $100 million of permanent life insurance,
Yes.
and he had massive CDA, capital dividend account credits, whatnot. And then I've shared on the show before, my kids have permanent life policies as well,
Yeah.
because it's the math is there. The sooner you start, the better. But again, I think it's partly two things. People don't like talking about death.
Mm.
The other part is you need to be able to afford it.
Yes. You need to be able to afford it. And you also need to be able to. Sometimes I actually think the interesting thing about insurance, which is different from investments, is that you can kind of like see the growth and it's almost a little bit more intuitive for people.
Hmm.
Whereas insurance, for a lot of things, is an exponential curve. Our minds are very linear when we think about dollars and cents. We think about the world. We make assumptions or have a bias that things grow on a straight line basis, right? But insurance grows on an exponential curve,
Hmm.
right? So often, the anticipation of that or the explanation of that, this is why starting early is
Hmm.
so favorable.
Hmm.
Like, you're so advanced in terms of like being able to choose something for your kids when they're young,
Hmm.
because you'll see how that grows for them. And pretty soon, like, regardless of, I know now we're on the cusp of AI, so who knows what my kids' careers are going to look like, right? But at least they know that they have a retirement distribution stream that would be solid for them.
Hmm.
Yeah.
Maybe the English should be, I think anyone who has extra money. I don't know if that's the right term. Anyone with good disposable income should be looking into what to do with it.
Yes.
And the other term for insurance is risk management. And I should probably mention I used to work in risk management.
Yeah.
I worked for a risk management software company for like 7 years. I forget the number now. Yeah, but again, like insurance is basic risk management.
Yeah.
And one of the and I I'll share this quick story because I want to get off this topic because it's so morbid. But I had this client who couldn't get life
Mm.
insurance for herself because of pre-existing conditions.
Mm.
Uh, but they had kids. So I said, do your kids have life insurance? He said, no. I said, you need to look into this ASAP. I don't care who you buy it from.
Mm.
But because I think we all can appreciate, I don't want anything taken away from me ever,
Yeah.
right? I don't want the option to have life insurance for myself ever taken away from me.
Right.
And that may happen to your children should your issue be hereditary,
Yeah.
right?
What do they say? Like it's the risk that is the hardest to diversify is actually your health. These are the things that you can't
Oh, yeah.
actually change.
Steve Jobs would still be with us if he could do
Right,
that.
right. So like, so planning ahead, it's interesting. Sometimes when we talk to clients, we have this also bias around, oh yeah, it's I can do that next year or I can do that next month, right?
Yeah.
And sometimes you can't, right? Like the thing about these products is that you're really protecting yourself against catastrophic
Yeah.
loss.
Yeah. I literally have clients deferring their wills.
Yeah,
And it doesn't
that's
cost
right.
that much
Deferring
money.
our wills. Oh my gosh,
Can you-
yes.
Right?
Yes. But it's also, it is also sometimes we are overwhelmed by the choices to be made in that will.
Oh,
And the
yeah.
decisions that require careful thought. And
Right.
also in a marriage that requires some very intense dialogue.
Yeah. Yeah.
Right. So it always helps actually to have a guide. I know there are lots of will, like, technology platforms where you can do a simple will, right? But
I can see how that's fraught with problems.
yeah, I actually think the value is in that planning stage to really articulate what is important to you.
Yeah. I can totally appreciate because I haven't gone through the process before. It is awkward. It is a little bit awkward because there's questions that you haven't been prepared for.
Yeah. And often couples don't talk about those things, actually,
Yeah.
right? Unless someone's forcing you to have this conversation, you may not have been sitting down with Jerry to have those conversations.
Yeah, no, that's why I appreciate the experience I had with Hussein, our lawyer who did our wills.
Right.
Now, let's talk about Open Concept Financial Group.
Yes.
What attracted you to them? Why'd you join them? If you can discuss around how you joined them, because your agreement is very different than my agreement. What can you share?
Yeah, for sure. Why did I join? I think, well, it started off with I said to Ivan, oh, this is such an interesting space. Like, let me study this a little bit. And from there, we just over a series of lunches, we just brainstormed a few things that we thought were, wow, this is kind of interesting, like growth levers of this company, right? And having the right assembly of skills, insights, access to certain products that we can actually package up differently. So some of it was product oriented. Other things was like, oh, this is also a very scalable model, right? If when we
unlike real estate, local real estate, that is. Sorry.
Yes and no, right? It's scalable in the sense that so much of our work is actually listening and relating to people so that they're open and trusting to share their stories. Like money stories are very vulnerable. And then from there, we might have some tried and true strategies and techniques that actually help them optimize the picture. And everyone wins. Like it's actually, you're really providing good service in that case, right? And how do we actually find more people who, have the financial curiosity and acumen, right? I think those two are really important in this industry. Otherwise, you're pushing product and you're not pushing solutions.
Which is so sad because there's such a large part of the population who's not interested. I have a saying. I don't know. I think I made it up. Is that ignorance is bliss? I didn't make that part up. I do believe it. I have many friends who are who don't read the news, for example, and they're happier. Statistically, you don't read the news, you're happier, right? But then the other side of it is you may wake up one day and realize you can't afford to retire. Yeah. Right.
Yeah.
That's the risk.
Yeah.
Sorry.
That's the head in the sand story, right? But yeah, so I think, A, we saw the opportunity. 2, we saw that, hey, I think Ivan and I are very compatible. Like we're just, he's strong in certain things and I'm strong in complementary things. And we thought this is a good opportunity to actually create something. And if we could create a strong enough value prop and attract more qualified talent to the company, like we could do a lot here. And so it's this interesting angle that we're always looking for, which is, someone who has a financial background I think that makes for the strongest, consultants in terms of wealth strategy because you're able to talk the talk. You're dynamic in terms of how you create the solutions or the strategies for the client, right? Two, I think it's people who really care. Like you have a genuine interest in wanting to further their, their life and their wealth,
Mhm.
right? And I think that's really important,
Mhm.
right? And you have this optimization angle, which I love. Like, I think, we're always seeking to how do we optimize the client's
Mhm.
perspective. And I would say the last thing is you have to have really good communication skills in this space because the products can come across very complex. But
Oh,
the
yeah.
key is how can you simplify it in a
Yeah.
way that isn't daunting, but
Right.
makes people appreciate what
Right.
it can do for them.
You talked about psychology and money, and there's all these people who hate people that make money and think it's are so evil. I've literally seen the other side. I don't know if you know, Cherry and I have a registered charity. So we used
Mm,
to raise money for our charity.
wow.
And when we looked at who our donors were, they were our clients who we had made a lot of money for,
Mm,
right? So our own experience was, and also you see it in the public as well, like who the biggest donors in the world are like Buffett, the Gates Foundation, right?
mhm.
And our own experience was it was our successful wealthy clients.
Yeah.
So if we have more wealthy clients, it benefits charities.
Mm.
So is there a more noble cause?
No, it's so true. I mean,
And they pay more tax.
well, here's the thing, right? Like money ultimately is a resource. It's a resource.
Yeah,
So,
for
so
charities
yeah.
too.
And so you like the great thing about it is that when, you've worked hard, you've made smart choices, you've created a foundation for yourself, you've created multiple income streams, etc., and you get to look back and say, now I have choices.
Mhm,
Like I have choices of where I want to channel that to do, to create the change I want to create in the world.
mhm.
Yeah. So I think that's a very powerful thing.
Well, you've mentioned before we're recording, other times, not other times, that you've actually attracted people to the firm who are from the bank.
Yeah, yeah, for
What
sure.
is it that attracts them?
Well, I think it's two things, right? One is because we are an independent brokerage, so we can actually partner across many, many different financial
Mhm.
institutions. We don't have a quota system where you got to sell X
Right,
units of Y
right,
and like make sure, I don't know, if
right,
I'm the green bank, everything that we pitch to the
right,
client must be green in color, for
right,
example. We don't do that.
right.
And so
Like
you,
me, like I'm an independent contractor, right?
that's
So they're
right.
all independent contractors. They can do whatever they want.
Yes. And also, therefore, we can pick and choose,
Mhm,
right? I can put together a solution that takes the best of company A and company B
mhm,
and C.
mhm.
And oh, interesting. When I connect those dots together, it's something you would never have been able to get at any branch
Right,
that you
right,
walk into.
right,
And that's what makes our solutions differentiated.
right. And also with the people you attract to the firm, that's what they want to be able to do.
Yeah, because they can see themselves handcuffed. Like, why should I push? Just because the flavor of this quarter and the flavor of this month is X,
Mhm,
that doesn't mean that it's right for this client,
mhm,
right? But a lot of times the client who walks in is none the wiser,
mhm, mhm,
right? So ultimately, it creates a disincentive,
mhm,
actually. Whereas in our firm, right, like we are directly correlated to helping the client grow their assets in the best way possible, regardless of which
mhm,
products or firms or solutions we pick.
mhm.
Yeah.
In the real estate world, we see this a lot in the mortgage space.
Mm.
For example, a lot of people who work for independent mortgage brokerages, a lot of them came from the bank for the same reason, was that they weren't able to offer a more custom solution, bespoke solution for their clients,
Yeah. Yeah.
right? And I guess I'm seeing the same thing here. And also, like when I was doing my own research, understanding how the industry was, for my own values, I could never join a firm where you could only offer their product.
Yeah. It
Like
just doesn't seem like it honors consumer choice.
it's yeah, because like
It goes against your whole optimization thing, right?
yes, and like for example, Cherry just did her certified financial planner. She already passed the test, and there was nothing on real estate investing,
Mm.
right? So I think we all know. There, I know you don't have any,
Yeah,
but
yeah, but it doesn't make sense because
right?
the people you serve, the reality of their wealth
Yeah.
includes real estate. Of
Yes.
course it does,
Yes.
right?
And also like I don't know if you know, accountants, there is no learning around life insurance. So that's kind of like why we were interested in this business as well, was to bring all of this under one roof.
Yeah.
We have a sister company that's an accounting firm, Real Estate Tax Tips. We can offer you local real estate, U.S. real estate. I can offer you professionally managed funds.
Right.
That when leverage should the expected return will beat real estate. And also, we have clients that have estate planning needs, so we have life insurance options as well.
Yeah.
So it just made sense.
That's very aligned with our vision, right? Like when we renamed the company, we renamed it to Open Concept.
Yeah.
The idea was, wealth should be like an open floor plan house. You walk in, we should see different domains. We should see good diversification, but we should also be able to understand how each reinforces each other, right? So to the extent that, for instance, you have the whole life policies for your kids, right? Like that's one asset class that's very important, right? That creates a different goal and income stream for them. But then you also have different aspects of what you're planning for in your kids' life, for their wealth, right? And all of that should come into the conversation.
Yeah.
I don't want to just see clients and just manage their stock pickings. Like that's not what we're about. We're about figuring out the entire wealth picture.
Yeah, I really wish we did this business earlier, because I don't feel right about a lot of the decisions we suggested to clients in the past. Because based on this is just who comes through our door, is almost everyone who comes for a meeting with me, they're over 90% local real estate, right? Their net worth, their portfolio, right? So no financial advisor in the world would recommend to say that's healthy, right? You should be more diversified. And on the same side, like my kids each have a house earmarked for them, right? Who in their right mind would say that's a bad plan for them, right? Like, I think we all know real estate's only going one direction long term.
Yeah.
Right. Yeah. So tell us more about the firm as well. Like, why the decision to join?
Yeah. So I think it was the opportunity, two, this idea that I could get really close to families.
Right.
So I think,
but you could have done that as an independent agent. The way I introduced you is that you're one of the owners.
Yes, thank you. I mean, I think part of it was, I would say that, I wanted to work with Ivan. Like he's a veteran in this space, right? So he is, gone through so many stages. He used to be at TD, he was in private wealth, and then he moved out, and he really carved a very successful business for himself, right? And it led me to think, okay, well then, how do we take the secret sauce of that? And how do we make that bigger? How do we grow the right infrastructure and the team? And so I'm like very interested in business building, in addition to figuring out how do we actually, serve more clients and et cetera. Yeah.
Because this is interesting because I think I've shared with you, you actually sit on a lot of my meetings, is like pretty much no one argues with anything that we have to offer them.
Yeah, because it's a common sense.
Yeah.
Which is why I would have to say, like, maybe more than half of the work is education, right? It's actually just showing that, hey, did you realize that if we reassembled a few things, you could have this, right? And I think when we're able to show that path, like, it's becomes not a sales conversation. It's just like, how can we help you achieve your financial goals faster, differently, with less risk?
And usually less work.
Yeah. And perhaps like, less hands-on work. Like it's not this, we're not doing active investing. A lot of times we are making the right choices so that it is a passive income stream for you.
Yeah, I'm guessing you're seeing people all walks of life. Do you want to talk about the charity work that you're doing?
Yeah, I mean, I'm also very involved in a number of charities. One of the ones that I serve on the board of is HF Care, which is a mental health agency. And this is my strategy mind. So, my background was in strategy consulting. That's where I started. I always think about like, what is that inflection point for people? It's true in wealth planning. Like, hopefully, when they come work with us, it is an inflection point for them, right? That we now start thinking about making choices differently that really paves the path for them. When it relates to mental health work, I also think that I'm interested in how we change lives, which means I'm interested in investing in really amazing inflection points. And I think when someone has the courage to seek help especially for their own mental health, it serves as a really meaningful inflection point. And so that's why I'm really invested in that.
Do you help them with their investments?
No, so, as a board member, I'm more on the service side. So thinking about how do we steward the organization? How do we grow? How do we serve better, differently, perhaps more holistically? So no, there's clear segregation of, responsibilities there.
Is there anything you can share about the work that you're doing on the investment sides for other charities? Not the one that you serve on?
Yeah, I mean, not necessarily for other charities per se. So I don't currently, have clients where they're foundations and figuring out their investments per se. I mean, that could be interesting. But I also think about, I like figuring out how do we create win-win, almost partnerships, right? Like in terms of how money is invested. A very interesting area, I think, is around planned giving, right? So, if we're thinking about estate planning and we realize, oh, did you ever see the tax bill that is likely going to be
Mhm.
on the horizon for
Mhm.
your family?
Mhm.
I think that's a really great opportunity
Mhm.
to talk about legacy giving.
Mhm.
I really got good opportunity to see, hey, if we just carve this out differently, you could yield very
Mhm.
differently.
Mhm.
Right. So I think conversations of that sort, like I want to start to bring that more into the forefront of our work.
Maybe before we go to that level, can we talk a bit about corporate-owned life insurance?
Mm.
For the right person, is a complete no-brainer. Like literally, a friend of mine who's a former math teacher
Mm.
understood it. And then he got into the business and he's doing really well selling it, right? Because you can't argue with the math.
Yeah.
Can you maybe talk a bit about corporate-owned life insurance policies and the advantages?
Yeah. Oh, that's such a
Because first of all, it's for a certain corporate or corporation owner.
right,
Yeah.
right. Okay. So
Maybe start there. Who is it right for?
yeah. Okay. So corporate owned life insurance essentially is a whole life policy that typically is a whole life policy where we will actually have the owner be the corporation and the insured life typically be the owner. Okay. So it works really, really well in professional corps.
Hmm.
So lawyers, doctors, healthcare practitioners,
Accounting firm owners.
accounting
Yeah, yeah.
firms, right? If you're like a consultant and you run your own corp,
Hmm.
real estate professionals, also really, really great.
Because when
Because
Cherry tried to explain this to me, it didn't work. Only when you walked me through the numbers, they're like, "Oh my god, this is a complete no-brainer."
yeah, like
Yeah,
once you see what's possible with it
yeah.
as a vehicle, it's very valuable. And it's
Oh,
valuable.
sorry. Just to add,
Yeah.
my listener knows I'm a complete skeptic. My mind way often goes to the worst case scenario. When you showed it to me, I was like, I think I said it to you when you showed it to me. Like someone rich wrote this, right?
Yeah.
Because generally only successful people can own this.
Well, let me put it this way, right? Like you do need, a lot of these policies, you need cash flow to be
Yeah,
able to afford it
yeah,
and to be able to make the right choices and invest in it. But in a corporation, it makes so much more
yeah,
sense. So much more
yeah.
sense.
And that's generally someone who's pretty successful. Yeah,
Yes, yeah, yeah. So if you've got the means to have incorporated your business, which is comes at an expense,
yeah.
right? And your business is a going concern,
Hmm.
you're the owner, therefore you're generating income in this company. The way we want to set it up is we want to think about how we translate business wealth into personal wealth. And so corporately owned life insurance is
Yeah,
a really great
yeah.
vehicle for that.
Because what are they supposed to do with the savings in our? Because that's usually what they come. Usually how they come to us is like, I
Yeah.
have all these savings just sitting there.
Yeah.
I don't want to invest in GICs. For
Yeah.
those who don't know, passive income is taxed at 50% inside
Right.
a corporation. So what do I do with this money?
Yes. Yeah. Yeah. So let me paint the typical picture. I'm just going to expand on that illustration that you have right now. Right. So the typical picture is there's a corporate owner. They, all their billings, earnings goes to the corp. The reason it goes to the corp is because they pay a much lower income tax rate,
Yeah,
let's say 12%,
yeah,
right?
yeah. Small business tax. Yeah,
And which is great
yeah,
because compared to your personal tax, you're
yeah,
looking at maybe 50%.
yeah.
So 12% tax. And that owner is very careful. They actually check with their accountant. I will only extract up to X dollars of, as employment income or as dividend. So they're taking the minimal out for their lifestyle and leaving all the cash sitting in that corp. Okay. And they're thinking, okay, someday I'm going to sell it or I'm going to be able to access it, blah, 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 right? And the reason that corporate life insurance is very, very interesting is because you could actually have the corporation take advantage of that 12% tax rate, and any retained earnings, they can actually use that to buy a whole life policy of the actual owner. And so now the owner has insurance against his or her life, and it's paid for by the corporation, okay, before any personal income tax.
Mhm.
And when you do that, you actually start to grow, cash surrender value in that policy.
Mhm.
You grow your death benefit. And eventually, when that business owner will pass someday, what happens is that that entire death benefit gets paid to the corporation. And correspondingly, because the death benefit gets paid out to the shareholders tax-free, they also get a corresponding capital dividend account. And that entire amount can then move to children, spouse, whoever it might be, completely tax-free outside of the corp.
Mhm.
Yeah.
And anyone
Very
listening to this
powerful.
thinks that they want this, we should book a call. 'Cause I'm happy to have that debate with anyone who thinks that this doesn't make sense. For example, I did have a guest in the past who said this stuff doesn't make sense.
Mm,
But just to again, I went through that transcript many times. They also mentioned they don't work with high net worth people. So
mm.
again, this is the level of successful people this makes sense for. Again, people can argue that makes no sense. Cherry and I literally have quite a bit of it, right?
Yeah.
So
Yeah.
and also, having a lot of entrepreneur friends who are successful, a lot of people have this. And then, did I already talk about Ted Rogers? He had
Yeah, that's
$100
right.
million
Yeah.
dollars of this stuff,
Huge.
right?
Yes.
So the guy who could afford, I don't know, an army of financial advisors decided to have 9 figures of this stuff, right? So, I'm not saying this is, some people may not agree with me, but I don't think it's the be all and end all. But I
Mhm.
do believe it's one thing I need to have for my estate plans and for my diversified portfolio.
Absolutely.
Yeah.
And it's one of those things you can set it up in such a way that essentially you could set it up where all the payments are concentrated in the first 10 years. So where the corp is still making good money, steady income,
Hmm.
you're still billing, you pay for that whole policy. And then in the 11th year, you never have to pay again.
Yeah.
Right. So you can figure out the design of it in such a manner that it fits the cash flow profile of the corp. And also it's a very efficient way to move from business wealth to personal wealth.
Right. And if you have a lot of it as well, you can borrow against it immediately.
Yes,
So
all the
then,
benefits.
yeah.
Yes.
So
Yeah.
you essentially are barely out of pocket anything.
Yeah, like all the benefits of leveraging that because whole life is an insurance policy where the death benefit pays out regardless of when you die across your whole life, which means and death is a certainty. And therefore, institutions will actually value that policy as if it's an asset. It's an
Hmm.
asset that you've owned, you've built over time, it's grown for you. And therefore, that growing value you can actually make use of. In many, many ways, you can use it to invest. You can use it to redirect for other needs. You can use it as a income stream for your retirement. There are many, many uses for it.
Yeah. And especially for estate planning to cover that eventual tax on the state.
Right.
Right. Again, the math is a complete no-brainer. And again, the fact that you can, again, if you're successful and you can afford the interest payments, you have more flexibility for even more advanced jujitsu,
Yeah.
financial jujitsu, as I call it.
Yeah.
And again, that's why I say someone rich wrote this tax policy.
Because if the corp has other assets in addition to the retained earnings that you're going to direct into this policy, like let's say you have the building, of your dental practice, et cetera. Like there are going to be other ways to
Mhm,
move those assets and that wealth
mhm,
outside of the corp when you
mhm.
pass.
One thing I thought about also is since I started working with you on the what we call wealth planning. I wish I wish I knew what I knew today because I think my career choices would have been different.
Is that right? How so?
Well, one thing I already told you is I
You're
wish
so
that
successful.
one thing I said I wish we were doing this 10 years ago.
Yes.
Uh,
Mhm.
Again, not all of the products that we offer today were available then.
Right.
But for example, what we call leverage segregated funds, or I call 25% down the stock market. I told you, like if I did this back in 2005, I'd be way richer, and
Yeah.
also so would my clients,
Right. Right.
right? Like how no one can argue that, right?
Yeah. I mean, the idea that you can share in the risk of that asset. So the thing is that, if there's because it's an asset class that has downside protection and it can be collateralized, it allows for all these options
Hmm.
around how you acquire it. And if you can acquire it using leverage, then you get to eat all the upside.
Hmm. And this, and I, even as we're talking, I know a lot of people won't understand. I've spoken to so many people who've spoken to infinite banking people, and
Mm.
they don't understand it.
Infinite banking.
People
Yeah.
who've been presented infinite banking, and I'm not saying anything about the strategy. It's just that
Mm.
a lot of people do not understand it at all, and just in general, all even the stuff we're talking about, a lot of people don't understand it. Which is why I think they should all come Saturday, January 31st. Like you
Yes.
will be there at the Wealth Summit as well,
Yeah.
and your business partner Ivan,
Right.
and we'll be happy to. Well, at least I will be happy to. And also, Winnie told me before we were recording, she's happy to stay till midnight, answer all your questions on anything we discussed today,
Yes.
anything we discussed at the Wealth Summit on January 31st. Um, because again, end of the day, we're helping people,
Yeah.
right?
And knowledge is power. So if anything, if there's anything that we share that like piques your interest at
Hmm.
all, right?
Hmm.
Like I think you owe it to yourself
Hmm.
to understand it,
Hmm.
learn it, look into it, and
Hmm.
see how it fits into
Hmm.
your wealth picture, right? So
I've told you about my frustrations of being a landlord. You've heard some of it when we weren't recording. as, as I have a broken washer that we bought only 3 months ago, and
uh,
why is it costing me $300 to fix? I digress. Where was I going? My advice to my clients these days is that I've always said this: life is short.
mm,
I believe investments. The definition of investments is passive.
mm,
Anything that's active is business.
mm,
Even many people who promote real estate investing even say a single family rental property, condo, whatever, it is a small business,
mm,
right? My philosophy is also just again in traveling, and like we both live in Ontario. Most of the investors that listen to this in Ontario. My observation of Ontarians is we're way more stressed out than all the other Canadians,
mm.
right?
Culturally.
Culturally,
Yeah.
just go Quebec, go to the neighboring province, Manitoba, Quebec,
Yeah.
anywhere else in Canada. I generally find we Ontarians are the most stressed out. When you
Right.
see our traffic, I think everyone appreciates why we're so stressed out. But my point where I'm going is that I think investments should not take away. Uh, Life is short. Investments
Yes.
should not add to your stress. Should not take away time from what's really important. And
Right.
what's I think everyone agrees what's important is relationships, time with family. And then for a data point, I only learned this yesterday. The this is 2 years ago, so the opinion matters more in my opinion. But the Surgeon General of the United States,
Mm.
he actually equated loneliness to the equivalent of smoking 15 cigarettes a day.
Yes, yes. There's a
Yeah,
book he wrote about that. I remember reading. Yes,
yeah,
yes. He studied loneliness, and that was a big,
right.
yeah. So the challenge is, yeah, we don't realize that relationships is that big Harvard study, right? Relationships is like the single biggest.
Oh, there's a bajillion studies on this where
Yeah.
relationships, happiness, quality of relationships
Yes,
is the
highly,
for
highly
happiness and I,
correlated,
right.
right? Which is why when I think about money, this is also why we're on this quest to reach as many people and ideally as young as possible, actually, because then they can make smart choices and
Oh
set
yeah,
themselves up for success, which we
yeah.
want to see, right? Which is, when you think about money, the thing that we don't talk about enough is it's actually time that is the most non-renewable
Mhm,
resource
mhm,
in your financial
mhm.
picture.
I thought you were gonna say health, but health is not
Health
renewable
is true
either.
too.
Yeah.
But it's time is non-renewable, right? So therefore, right, like what we hope is, you make the right choices early on to
Mhm,
structure things well,
mhm.
then, go and enjoy your life,
Yeah,
right? You've already set it aside. We've already taken care of it.
yeah,
And everything above that becomes gravy.
yeah. Because that's what we're trying to people do. Get people to do
Yes.
is set it and forget it. Your retirement, your private pension, your whatever is set.
Yeah.
We're on a plan. We stay on this plan, which really doesn't take much of your time.
Mhm.
No tenants will call you. Is it's I've been at land for 20 years.
Yeah.
I haven't seen anything better in my professional experience.
Yeah. And the thing about investments of this sort is that maybe unlike real estate is that it is very accessible. So remember earlier on we were talking about, diversification and income
Mhm,
diversification, right? Like you want to have the type of asset that, hey, if I need to pull this out today, I can,
mhm,
right? Without having to list my condo for sale and all the friction involved with selling, right? Like, so even the flexibility of how you design your wealth is really important because it gives you different levers so that you can be opportunistic, right? So that cash is also an asset class. Like, it's very important to be able to access your wealth when you need it.
Even better cash flow.
Yeah.
And I'll just also add, I'm not saying real estate bad. Like, I really just had a guest on who, Michael Rosehart, who's doing wonderful work with motels and making lots of money, but that's
So
active. And again, for someone who can't afford the stuff that we're talking about, if they want to go flip houses and they're handy, there's so much opportunity right now.
Right.
I'm saying that's great for them. I would encourage them to do it. It's just not right for me with a young family, right? So if I was like 20 years younger and no kids, I'd be all over that.
Like sweat equity?
Yes, sweat equity, and also being able to identify opportunities. It's really easy to identify. There's more opportunity than for a long time than there is right now. But again, where I am in my life right now, my priorities are different, my values are different. So yeah, it's not for me. But again, I still think it's right for a lot of people. But just understand it isn't passive.
Yeah. And also understand that, I always caution, for a little while, especially in real estate during that COVID time where it was peak and it was all this activity, right? Like, at the end of the day, whether you're buying, in the market, you're buying into the markets or real estate, et cetera, you're still like buying into potential volatility, right? There was this aura at one point that real estate can only go up, right? And that might be true in the long-term
That's because
horizon.
no one was around for 1989, the last really significant correction, which was kind of looks like we're in that now.
Yeah, like
Right.
this long stretch.
Right.
And therefore, I always encourage this when you're about to embark on making any financial choice, whether it's investing in the markets, maybe hotels, maybe whatever it is that you're choosing, including investing in segregated funds or an insurance policy, et cetera. Like, always know your downside.
Oh yeah.
Okay, so whether you're working with us or working with any financial advisor, right? It's so important that you ask this question, and I want someone to quantify it.
Oh yeah.
For me,
Yeah.
always know your downside because then okay, is this a tolerable loss, and what time frame, right? And if that's okay, then you've already accepted the uncertainty around it.
The sad part is that so many people that bought like pre-construction, for example, didn't understand you could lose beyond your investment.
Yes.
Right.
Gosh.
So I'm not down for that.
Yes.
For example, like one reason why it's nice to invest in the States is if you can return the keys to the mortgage company and walk away. No recourse mortgages.
Wow.
Right. So why would I invest here? I can just invest in the States and protect my downside.
Wow.
Yeah. 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 So so I still love real estate, but just it has to be landlord friendly and positive cash flow.
Yeah, but even you're right on the value of the property. There's downside, pre-construction. You're just describing that, but also even we were just talking over lunch about how you have a tenant who's not paying.
Yeah.
Right now.
Right now.
Literally happening right now. Like, how stressful is that?
It's not my first rodeo, so it's not so bad. But yeah, for a first time investor, it's not fun, right? Especially if they're. I'll give you an example. Especially if I've seen it many times before, where a client, their spouse doesn't agree with the decision. So now, and then if they were in this, the spouse would be all over them right now. See, this was a terrible decision, it's a terrible investment. Sell it, right? And then look at the market now. It's not the time to sell.
So clients who are in that situation, what do you recommend for them? They're just in this really difficult spot.
So my clients, I've always told them like this: to do this, it should be a 10-year hold. Like you don't do this if this is not a 10-year hold. Right. Because no different than what we talk about professional managed funds. Yeah. Even talking about leveraged stock market funds, whatnot. You really should be prepared to hold for 10 years. Yeah. Right. To write out the downside.
Yes.
Yeah. And there is good downside. That's your time to be buying the dip.
Yes.
Right?
Yeah.
Yeah. Yeah. And again, like if people who like local real estate, this is an ideal time to buy the dip. We talk about the devastation in pre-construction condos. I think there's more downside to come, but pretty soon is probably the time to buy if that's your jam. Yeah. Right.
That's why asset flexibility is so valuable.
I've always, I think that I'm asset class agnostic.
Mm.
I think there's no bad asset. I think there's just better, that can be better for you, right?
Mm.
That might not be ideal for you,
Right.
right? Just like real estate, again, can be wonderful. You can make lots of money. But again, you should be local to it. You should be handy,
Mm.
right? Um, and you got to be lucky enough to be in a good area to invest,
Right.
right? So again, that's the right opportunity for someone. Not ideal for almost all of my clients who want passive,
Right.
right? So yeah. So again, it's really just to identify what suits the client.
Right.
Right?
Right. Right.
And again, that's why we designed the business we did. So no matter what the asset class, we can offer it, and they
Mm.
pay us, and the vendor pays
Yeah,
us.
that makes a lot of sense. And I was just, one of the things you were sharing earlier was this idea around, at different levels of wealth, maybe, the next best place to put your next dollar is
Hmm.
actually kind of like part of the wealth strategy
Yeah,
conversation.
yeah,
And I was just doing an illustration for someone the other day, and I thought this is such an interesting example to highlight, right? And this is the power of having access to financing that amplifies
yeah.
your investment. It's like such a powerful thing. And it was this contrast between, let's say you have 2,500 to invest in, you can put it into your TFSA. You can also put it into this program where we actually amplify the investment with financing. So you can buy like a risk protected asset, like a segregated fund. And we were doing these two scenarios. And let's say you invested it in exactly the same place. S&P index over here, S&P index over here. Okay? And let's say the S&P index next year, let's say they did 10%. I'm just going to use the
Yes,
long-term
please.
average
Okay.
at
I'm
10%.
quoting you. I'm putting in money this week.
20, let's just say 10%, which is a long-term average. Okay. So you turn 2,500 invested into a TFSA, you grew it by 10%. What did you get?
Like 40% less my interest expense, my financing expenses. But yeah.
Oh, but 2,500, you get 10% of that. So you earned 250. Great. Okay. So the equivalent of that 2,500 could actually give you access to financing of 50,000. And if you put that same 50,000 in the same asset class that grew 10%,
Mhm.
what do you get? You get $5,000.
Yeah.
In the same time horizon, you could have earned 250 or you could have earned 5,000. So investing in the exact same asset class, same risk
Yeah.
categorization. The difference is, I'm going to say, is that it's really only appropriate for individuals who have at least a 5, if not longer, horizon.
Yeah.
Right? Because anytime you use leveraging to amplify gains, it also amplifies the downside.
Mhm.
But we all know that you have this beautiful chart about the growth of the markets
Yeah.
versus different assets. I always quote actually the Wealth Simple one. Maybe you
Mm.
can put it in your show notes. The one that was like played during the World Series.
Oh, okay.
I will have to send it to you because this is a really cool illustration. It was about the TSX and it kind of grew over time.
Oh
And it
man.
was this visual that is so powerful because the reality is that we are, as a society, always striving to create more wealth and success and economic prosperity. Right. And so if you have confidence that the value of these assets are always moving to the upper right, then any kind of downturn is more a blip and you're still on a curve of growth.
Just to add to the reason why you need to be ready to be invested for beyond 5 years and beyond is, I would actually add to that, you should have money on the sidelines ready to deploy should there be a dip,
Yes,
right?
that's the other, yeah. Like it's from a savvy investor standpoint, um, it is so pivotal
Mhm.
actually. You can
Mhm.
have, make very pivotal choices in moments of a
Mhm.
downturn.
Mhm.
Yeah.
I think so even for Cherry and Ice, for us, we're actually hoping, our plan is to deploy a significant amount of money every year
Mhm.
to average cost in,
Right, right, right.
right? Not where necessarily average cost in, it's more just like when we have funds available.
Yeah.
Uh, for example, in the real estate analogy, back in back in 2007-ish, 8, what those days, many investors, their goal was to buy one house a year.
Mm.
So me to deploy a chunk of change into the strategy once a year seems very. I think it's something that everyone should, I think, strive for, and
Right.
it's basic risk mitigation, average costing, right?
Right, right, right.
Right.
Yeah. So true.
All right, we're way over time.
So
Any
fun.
anything you want to leave the investor with? You're a complete wealth of knowledge, and you're way smarter than I am.
No, not at all. Anything I want to leave. You know what I do want to say is that when it comes to money, I see more and more examples where maybe we are too passive, as in we are too afraid of making a choice. And
Yeah.
so we choose indecision
Yeah.
and we choose delay
Yeah.
and we choose inaction.
Yeah. Not getting a will.
Oh my
Can you
gosh, yes.
imagine?
And I really want to impress on everybody that inaction is making a choice and it
Yeah.
comes with consequences.
Yeah.
Right? So even if you're able to just make one forward choice, one forward step forward with momentum, you're actually going to see that, really strong wealth strategy, really strong financial planning is really a series of good habits, choices made with clarity.
Mhm.
And I think that a lot of times people choose inaction
Mhm.
because they're not clear. They're
Mhm.
fuzzy about their wealth. They're fuzzy about where it's going, what it's doing for them. Is it in the right places? Is it serving the right purpose?
Mhm.
And so much of our work is actually unpacking that, right? Is this working for you? No. Why? Why is it not working? Why are you still in it then? Right? So I would, my lasting thought, I think, is that, always be taking action. Be curious.
Mhm.
Feel this is your money, your assets, like be engaged. And then, make choices with clarity.
Yeah. So maybe it's my takeaway, and also just my observation of clients is, and I don't know if you know, I find almost nobody has a plan. Oh, I've done well over 40 consultations. I think only one had a professionally prepared plan.
Right.
Yeah, are you surprised?
Yeah.
Yeah.
Am I surprised? I think okay, two answers to that. One is um plan. You can have a plan. The question is what's the quality of that plan?
Oh yeah.
Right? Because I do think that there's a lot of planners that can push a button on a piece of software, spit out 60 pages of paper. And sometimes I see those and they don't even understand it.
Oh God.
Right? Or they don't understand the optionality behind it. I like the way that you do your planning actually, because I know we've sat in some meetings together where you really outlined the range of options
Mhm.
within what this plan tells you. I think that is the value of a plan, that it can
Right.
play back to you the
Right.
range of choices you can be making today
Right.
if you still want to achieve this outcome, right? So I guess 2 points is one is it's not easy, it's not hard to have someone push a button, you pay some money, you push a button, they give you a plan.
Yeah.
It's hard to have a plan that you have confidence
Yeah.
in. And as a result of that confidence, you give yourself permission to make different choices today. And I think that's the value of really great planning.
I tried to give you the last word, but I have to plug it. We do financial plans for our clients.
Yes, you do. You absolutely do.
Winnie, thank you so much for doing this.
Yes, absolutely. It was a pleasure. Thank you so much.
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating, share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover, or there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social media. Reply to this email that this has arrived on. I'm not hard to find. We're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you in the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.